Hello, everyone. Yes, you need to be open with Tesla. Wow. So I think the message we're sending to investors is that if you're going to buy Tesla, whether it was at our old target or our new target today, it has to be more than just cars. It has to be more than just cars times price. The neural pathways we're trying to open up for our clients are on battery supply and software as a service. This movie talks about the future of electric cars and the current state of the financial markets. In this exciting show, we go into great detail about Morgan Stanley's latest shocking report on Tesla's Q4 earnings. Hold on tight as we take you through the ups and downs of Tesla's financial journey. It's a story of innovation, competition, and market forces that is changing the rules for electric cars. We'll talk about the huge change in Tesla's path that was shown by Morgan Stanley's shocking words in this high-voltage talk. What do these revelations mean for Tesla's growth? How is the EV Titan changing its sales as market storms brew? Tesla's most recent earnings missed expectations, and the company's growth forecasts are now being questioned. Taking a quick turn, we set out to figure out what these changes mean for investors and EV fans alike. But wait, there's more. We're not just going to talk numbers. We're also going to look into the strategic moves that led to Tesla's big moves. Will Elon Musk be able to lead the company through these unknown waters? What does the future hold for Tesla in a world where electric vehicles are changing so quickly? Stay tuned as we answer these and other important questions. Don't forget to hit the like button, turn on notifications, and listen to Tesla stock news. You won't want to miss a single beat of this exciting saga. Let us get right to the heart of Tesla's new financial mess right now. Tesla's finances are getting a lot of attention because the electric car giant is having trouble meeting earnings estimates. The company's recent earnings were lower than expected, which suggests that its growth may slow down this year. Our experts stress the important phrase used by Tesla, notably lower, which means that the company's growth rate has slowed down significantly. Market analysts are getting into the specifics of this term, which has investors and experts worried. Even though Tesla missed its revenue and profit goals, the company's gross auto margins, excluding zero-emission car credits, were 17.1%, which was much higher than the 15.7% that was expected. This number isn't just a number. It's a key indicator of how well Tesla runs its business and how well it can stay profitable even when things go wrong. However, the big worry that's getting people's attention is the prediction for 2024. Tesla expects a slower growth rate than the strong growth seen in 2023, especially in terms of yearly car deliveries, which are a key measure of the company's success. Elon Musk, during a conference call, Tesla's CEO, talked about the problem. He said that the expected slowdown was due to the company's move to next-generation vehicles. Plans are already in place to set up post-manufacturing locations, starting with their Gigafactory in Texas and then adding more facilities around the world. Another important factor that shouldn't be overlooked is the overall slowdown in the EV market growth rate. While Tesla remained the leader in global EV sales in 2023, it faced tough competition in the fourth quarter from a Chinese manufacturer. Musk also talked about the fast growth of Chinese automakers around the world, suggesting that they could pose a big problem for other players if trade restrictions were lifted. Tesla's stock has gone up and down over the past year, with the energy storage segment showing a 30% year-over-year rise. However, investors are still worried about the lack of clarity surrounding vehicle deliveries in 2014. In addition, the Chinese auto market is slowing down, which is having an effect on Tesla's Shanghai Gigafactory and making Chinese EV companies more competitive. These factors are forcing a reevaluation of cell sales strategies and global distribution plans, which is a big change. Adam Jonas of Morgan Stanley has changed his price goal for Tesla to reflect changes in the EV market. This change shows that consumer tastes and market predictions have changed. Today, we'll talk more about Jonas's research and compare it to overall industry trends to figure out what the recent change in Tesla's price means for the company and the EV market as a whole. Targeted by analyst Adam Jonas is a good indicator of how the market feels about a possible change in the direction of the electric vehicle EV business. This change shows that more and more people agree that while Tesla is still growing, it is facing problems that could slow it down. Increased competition and market glut are two main causes of this slowdown. Even though this nuanced view may be different from the views of devoted Tesla fans, it is an important warning for investors and people who follow the industry. This is different from the past, when the EV market's growth story was full of unbridled excitement. This reevaluation and outlook shows how the dynamics are changing in the EV sector, where fast growth and expansion are now being tempered with a more cautious look at the future. How the market reacted to Morgan Stanley's new Tesla price target was urgent and important, which meant that Tesla's future growth prospects had to be reevaluated. Investors and industry experts are paying close attention to this move because they know that a choice like this from a major bank is a sign of bigger trends in the industry. Because of this recalibration, there are again arguments about whether the EV market's recent fast growth can last. People used to be very optimistic about Tesla's growth story, but now they're looking at it with a more realistic eye. This is because even though the EV maker is still growing, rising competition and market saturation are becoming major problems. Tesla's price performance has gone down since its previous highs, which shows that people's feelings have changed. Even though the EV market is still going up, it's in a tough spot. More and more people are interested in hybrid cars, which means the switch to fully electric cars will happen more slowly than was thought before. This trend, along with problems in the supply chain changes in the prices of raw materials and government policies, make it harder to predict the growth of the business. Analysts like Adam Jonas are being cautious because the market is readjusting itself. However, Jonas's valuation of Tesla still takes into account the company's many business areas, such as energy solutions and the potential income from full self-driving capabilities. What Jonas's new price means for his finances targets go beyond just figuring out how much a stock is worth. They also show how Tesla's finances and production plans might change, which is important information for buyers and market watchers. Tesla's profit margin, which is a key sign of its financial health, is being closely looked at. If these profits are expected to go down, it could mean that production costs will go up or prices will go down because of how competitive the EV market is. Tesla's production strategy is also very important. The company needs to increase production to meet demand while keeping costs low. However, the current market conditions of an oversupply of EVs and fluctuating consumer demand make this harder to do. Tesla may need to align its production volume more closely with actual market demand, which could hurt its profits in the short term, but could lead to new ideas and market growth. Ross, president and CEO of Gerber Kawasaki Wealth and Investment Management, says that Tesla's story changed a lot. It used to be a fast-growing company that focused on electric vehicles, but now it seems more mature and is having problems like supply chain problems. Product launches that are late and the need to discount vehicles are hurting profits. As the EV market gets more competitive and unpredictable, investors need to carefully weigh the facts and think about the future direction of the company. Tesla's CEO's recent request for a large pay raise has made investors think about these changes in the company's story. These different strategies highlight a larger theme in the EV market, finding the right balance between innovation and market pragmatism for Tesla. The main question is whether constant price cuts in reaction to competition and changes in the market can last. According to experts, Tesla needs to set a marker that most of the price cuts are over in order to keep its margins. Even though Tesla had a record-setting quarter in Q4, the competition in China is especially tough. Tesla has to choose carefully between lowering prices and keeping good profit margins because it has to deal with tough competition. The initial bloom of rapid growth in the EV market is giving way to a more complex competitive landscape. Analysts like Adam Jonas are calling out the complicated and shifting dynamics that companies like Tesla are currently navigating. Jonas's comments bring to light the many problems and chances that Tesla faces in this ever-changing industry. The market is complicated because it's not just about new technologies. It's also about how well companies like Tesla can adapt to new market conditions and handle their money well. Tesla, a leader in the electric vehicle (EV) industry, is at a turning point where its strategies for adapting to new markets and managing its